Also did it by economic classification. It was a mix of item label 3 and item label 2. So we did compensation of employees, and we've highlighted the departments that
And I'm working now from memory, so I can't remember exactly what all of the recommendations were offhand, but we would like progress reports and updates on those various kinds of items. And I think we need to make sure that there's alignment between the reporting that Treasury does and the questions that we have and the recommendations that we've made in the past to make sure that there's follow through and a regular update and that it's top of mind for us. So, for example, I went back and I looked and I saw it the last time when National Treasury was here, there was an update which is very helpful on the state-owned enterprises and where we were at with that and the helping us to assess the risk of further bailouts, for example. That was a helpful presentation. It wasn't included this time. There's the whole big issue, obviously, of the spending reviews and knowing where we are with the spending reviews, the progress that's been made, and that's obviously quite strategic in its importance. So that is an example of something which was on our recommendations, and it would be nice. I think it's essential for us to have a regular update on where we are with that. Otherwise, we tend to just focus on what's presented to us, but we're not necessarily asking the questions about what's not presented, but which we actually do need to know the answers to. Just with regard to the presentation, I wonder if it would be possible to get some more information on the DIRCO numbers there. We have a head count of 1,775 versus a target of 2,827, but the expenditure is pretty much on budget. So it seems to me then that on average, those who are employed are being paid about 50% more than the budgeted remuneration levels. There is a comment about rand depreciation, but that doesn't make sense to me why the difference would be so significant. So has there been a spending review conducted on the DIRCO expenses? Has there been some kind of deep dive analysis? And can the committee be provided with information as to why there's such a big mismatch between headcount and yet we're on budget? Could we have more details on the 435.8 million on the NRF direct charges, which on the slide hasn't been classified? And also on the slide itself, with the numbers, I don't see any numbers there for public sector related pension, post-retirement, medical, and other benefits. To me, that slide looks like it's got errors in it, and that to me is a missing item. So it's just some comment on where that could be, and also it doesn't make sense to me that our debt charges are only 10% based on the 1 quarter figures. It really, I think there might be an error in that as well because. It just seems just very unlikely. So I wonder if we could just ask for some input on that. And then the National Empowerment Fund, if I may go on to that, the question there is what are the assets that have been impaired? Could we have some more detail of that and why impairment was necessary? And also full details of the unbudgeted social benefit that's described in the notes on the National Empowerment Fund. That was a phrase that was used, unbudgeted social benefit. And then I would like to have more detail on sand parks overspending and why the overspending on goods and services was so significant. Thanks, Chair.
Thank you, Honourable Bateman. Honourable Mkhonto.
Thanks, Chair, for this opportunity. Good morning to you, Chair, honourable members, the Minister and his team. Chair, we accept the apology from the Minister of non-attendance of our meeting, and we hope, Chair, it won't continue because it really makes us frustrated. I hope the confusion that the Minister talked about will never happen again in the future. Chair, according to the MFMA, under or over expenditure is a misconduct. But before I go there, let me talk about also about our strategic plan. We requested that we be given information so that we become capacitated as to how can we play our oversight role in as far as the borrowings from the IMF and the World Bank and similar institutions are being executed. We're looking at that, Chair, because now the minister is going to undertake a trip to the IMF meeting. And we appreciate that. We know we are a member as South Africa. But then, Chair, the general public is complaining that our debt portfolio is now too high. So the minister has to assist us as to how in the future do we, on behalf of the masses of South Africa as public representatives, we are able to understand as to how are these borrowings being done, and ultimately how do they benefit ordinary South Africans. Chair, I will then come to the over expenditures and under expenditures. When it is less than 10%, Chair, is understandable. I see Home Affairs has spent 30.5 higher than projected, 34.5% higher than projected. We hope, Chair, this money has gone to address the challenges that Home Affairs offices are experiencing in the whole country, specifically that of the poor quality of ITC. When we meet that department, Chair, they have to tell us exactly where does the over expenditure come from, because now we are given a general information. Agriculture's Chair, the 89% lower than projected. When we are having a challenge of food security, I hope, as presented, it's not the red tapes in the grants that are as a result of this. Because Chair, we can't afford to have this. But then we thank the presentation, and we hope, Chair, the individual departments will be able to come and tell us exactly what are the reasons behind their over and under expenditure. Thanks, Chair.
Thank you, Honorable Mkonto. And if I can appeal to members that if we can have our cameras on this way, we can both be audible and visible, as it were. If I can then move to Honorable Skete, you are recognized.
No, thanks, Chair, for the opportunity. Chair, let me also thank the Minister and his team for availing themselves today. My first question, Chair, will be, while funding for the South African Police Services was set to increase normally by 8.5 billion in 2025-2026 financial year, the number of funded posts at all levels remained unchanged. If this is the case, how is the subs expected to find 2003 vacant posts which were responsible for lower than projected expenditure during the first quarter of the 2025-2026 financial year? And would the subs be expected to absorb cost pressures associated with these posts by reprioritizing and reallocating budgets across its functions, groups, and or programs? And what concrete timelines exist for filling this vacant post? And even if these vacant posts were to be filled within the agreed timeline, would the new recruits have adequate resources for critical complementary inputs to do their job sufficiently, given that compensation of employees absorbs a large share of SAP's allocation budgets? Second question, Chair, project implementation and procurement delays, which were responsible for lower than projected spending on goods and services across most departments in the first quarter of 2025-2026 financial year, procure negative outcomes resulting in vast sums of public money wasted, critical infrastructure projects stalled, and daily service delivery disrupted. In light of this, has National Treasury ever considered conducting a project and procurement bottleneck audit to understand the root cause of such delays? What has Treasury done thus far to simplify a framework of laws and regulations that govern procurement processes to prevent recurring delays? What accountability measures are taken in the second quarter of the 2025 financial year by National Treasury against departments that cite project implementation and procurement delays as justification for lower than projected expenditures? And the third question, Chair, is given that rising underspending in capital assets across service delivery departments such as health, water and sanitation, and basic education added further strain on the already insufficient public infrastructure, what penalties or corrective measures did National Treasury enforce against implementation agents and contractors that terminated projects, contracts, or abandoned projects before completion? If not, why not? Did the termination of projects, contracts, or abandonment of projects before completion translate into enormous financial burden like cost overruns and wasteful expenditure for the government? That is my question, Chair. Thank you.
Thank you, Honorable Skete. May I then recognize Honorable Wakeling?
Good morning, Chair. Thank you very much. Honourable Minister, thank you. Good to see you in good spirit and good health, as well as to National Treasury. Welcome on board. Honourable Minister, before I start, I've got a few, just in actual fact to the Chairperson. Chair, we as a committee crafted very specific, detailed monitoring points that we wanted to track over the next financial year and the year thereafter. It was incorporated in our yearly plan as well in our strategic plan. My question to you, Chair, is that the Secretary actually provided that to the National Treasury so that we can be clear and we can be on the same page. The presentation that was presented obviously came before that report, and that report now has been submitted with a very clear plan on what specific items we're looking at. And we would request National Treasury please to respond to that specifically. There are a large number of very specific matters that we are tracking. And if we can just get some clarity from either the Secretariat or National Treasury on that matter. That's just the broad matter that I would like us to engage on. Honourable Minister, I want to start off by asking a few questions around the specific quarter. You're obviously aware that it seems to me in general, if I look at the report, the matter of recruitment and selection and recruitment of new employees is an absolute problem everywhere. And the result of that is non-performance by the departments and underspending on their HR salaries. My question is, how does National Treasury going to intervene to assist, in particular, the police? I look at the police report and I see there's a low spending attributed due to vacancies and delays in recruitment. And obviously other departments as well. It seems to me health and agriculture, same problem. Can we just get some clarity in where we are with regards to recruitment and selection and ensuring that that money is well spent, as opposed to departments crying and saying they can't perform because they can't appoint? And I think that is important that we also deal with this properly. Then, Honourable Minister, the matter of Department of Health, I see that we have received a special appropriation that we need to consider with regards to the ARVs, and we understand where that comes from, and we are very clear what you want to do. So that is not a concern. However, if I look at the department's overall expenditure, they're already down 1 billion rand under expenditure. So, it's good we're going to give you extra money, but if the department's not going to spend it, we might as well not give it. So we got other places that we need to plug holes. If you possibly can just tell us that we can have certainty that money will be spent. And then attached to the thing of Department of Health, you're obviously aware that the Department of Health, in particular in Gauteng and in particular Tembisa, was in the news frequently in the last few weeks. My concern, where else on national level or at provincial levels and the other hospitals are we going to find the same coming up without us actually being aware of it? If we are aware of it, what are we doing about this? I mean, 2 billion rand just in Tembisa, we saw the result of that. And we don't need another painful explanation going through Department of Health, finding another hospital like, for instance, Charlotte Mateke or any of the other big hospitals also having similar problems. Then, if I may quickly ask, as far as and we had two presentations, Honourable Minister. The one was related to National Treasury and departments, and the other one was related to SOEs. My concern lies in particular with post office. So we know that currently there is an intervention plan. When are we going to get to the end of the post office? What is the plan? Have we committed ourselves now to further involve ourselves with the post office, or have we decided to move on? Because I know that there is a big cry out from, particularly in the rural areas, where people are struggling to doing transactions without the post office. I just want to get a sense of that as well. Then the municipal debt relief. I'm very concerned about the municipalities, and I'm sure you're also, Minister. My concern lies in particularly two areas. Obviously, the municipal debt relief support program. How successful is that currently with Eskom in particular? And then lastly to that, the pension fund contribution towards the pension funds for employees. We're going to see a serious problem coming up very soon if employees are not able to access their pension funds when they either retire or resign. And I'm sure you're aware of that, Minister. If you can just give us a highlight on what your plans are with regards to that. And then lastly, Chair, I became aware that as far as the spending reviews or the expenditure review is concerned, is that there's a program which is called the TRS or the TARS program. We as a committee have not been informed on what this program consists of, what does it do, how does it work, and where are we now with the program. I know this is a program that is looking at the complete expenditure review program in its entirety. Can we as a committee please get a full briefing just on the TARS program? And that will put us all at ease to have an understanding that expenditure review has been actioned and what we can expect. Thank you, Chair. Thank you, Minister.
Thank you, Honourable Waitlin. And I note the question you've put to me, and I'll respond to that in due course. Can I take Honourable Siate?
Morning, Chair. Thank you for the opportunity. Greetings to the Minister, the ministerial team, and members present on the platform. So, Chair, I have a few questions. And since underspending seems to be a recurring pattern over multiple quarters across most departments, what corrective actionable initiatives have been implemented by National Treasury in the second quarter of the 2025-26 financial year? Then economic growth is not independent of government spending. So, meaning government spending can improve counter-cyclical support and stabilize the economy through fiscal supplier effects. So considering that at the end of the first quarter of the 2025-26 financial year, government spending of 263.6 billion was lower than the projected spending of 274.9 billion. What was the impact of the lower than projected government spending on the country's marginal expenditure as the percentage of the GDPs? How much then was also the this lower than projected spending was due to a lack of capacity within the department? Then, since slow growth in social grants beneficiaries was cited as one of the contributing factors to understanding the Department of Social Development during the first quarter of 2025-26 financial year, has National Treasury verified why the Department of Social Grants beneficiaries had slowed amid the persistent poverty, inequality, and an unemployment level? Was this slow growth in social grants beneficiaries due to the changes in the demographic trends or the application backlogs under SASSA's new ICT system, or payment disruptions or fraud detection in the social grant systems, or even the effectiveness of the National Treasury's conditions on SASSA regarding provisional on all types of social grants? So what was the difference between the projected and actual numbers of the beneficiaries per social grants type in the first quarter of the 25-26 financial year? How did the slow growth in social grants beneficiaries strike a balance between the cushioning the poor against the rising cost of living and maintaining the fiscal discipline? So, whether they are measured as the percentage of the GDP of government spending, public sector payroll costs in the first quarter of 25-26 financial year were somewhat higher, have been growing quickly despite National Treasury's guidelines on costing and budgeting for compensation of employees in response to the challenges fiscal environment. So moreover, the main driver of the high public sector payroll costs is not that there are an unusual large number of public servants, because a percentage of population, the number of public servants is, if anything, somewhat too low. Now, considering this, what were the main drivers of the increase in the payroll costs? Other than the wage agreement settlement across the public sector in the first quarter, why were these increased payroll costs across the public sector accompanied by the improved quality service and delivery efficiency? And I will park there, Chair, and those will be my questions. Thank you very much.
Thank you, Honorable Siate. Just to Honorable Waitlin, the strategic document that we put forward and the respective questions that you had put was a process that there are a number of steps that we needed to undertake in order to be able to fulfill the requirement that the committee has agreed on. So on the first instance is that I have tasked the PBO in consultation with obviously other institutions, and one of them being the FFC, which will present today, to create a rubric that is inclusive of some of the questions that you've put forward, so that the nature of reporting that comes to committee is standardized. This eliminates this, if you like, death by PowerPoint, where you end up with 1 million slides, all talking about many things and at times not addressing some of the key questions that the committee has put forward. So that's on the first instance. So that work around that rubric is being undertaken, and part of the work that we're wanting to engage the PBO on is to get an update on that so that we standardize. The second is the invitation that was sent to National Treasury as it pertains to this meeting. And if you treat this meeting as a continuation of the first, had obviously been undertaken prior to us having adopted the schedule that you are, the strategic plan that we have discussed. And so it will inform the next engagement that we have with National Treasury as far as reporting is concerned. My commitment to the committee yesterday were driven around the fact that when we send letters of invitation to respective portfolios, those will then be informed by the two-stage process, both A, of the rubric, B, the strategic plan, so that the reporting is then consistent and then we can deal with the questions as we go forward. That transition, I must say, takes a while because you need to make sure that, especially projecting to the next, because invitations to departments, I can tell you now, you've almost, as a secretariat, have to begin to furnish departments with invitations in advance to secure dates with the respective questions and presentations so that they are done timelessly. So I want to give you at least the understanding that the work is being done, and it will certainly be at the next presentation with National Treasury, the format with which we will approach. The last point I want to make is on the question of spending reviews. I had an engagement, at least bilaterally a little bit, with the Minister of Finance to say, how do we establish this so that the committee is briefed on understanding what was then post the cabinet memo that spoke to spending reviews and how the committee is briefed up to that. And I think the minister will respond accordingly to say, here's what the updated process that goes into that issue. So, Honorable Waitlin, I say that to mean that we treat this meeting to finish the last one, and then at the next meeting that we set up with National Treasury, the process that was undertaken post the adopted strategic framework will then roll on from there. So let me park that one question there. Now, to National Treasury, some of the questions I wanted to put out. When we last met, and I think it's now common cause that we've had this discussion around debt, the holding of domestic debt. I want to say that one of the things that makes me proud, to be honest with you, is the appetite with which bondholders have for South African bonds. That is credit to National Treasury and Finance. And I want to make that point clear. The question as it pertains to that, or maybe not that, is some of the debt matures, if I'm not mistaken, within this medium term. And the question I was unclear about, Minister, is how do we intend on honoring that particular debt concurrent with the agreed upon principle that said in the medium term, debt servicing or debt to GDP will peak at 75%, if I was not mistaken, whereas I think the IMF projects 80% peaking of debt to GDP. I'm wanting to have a proper understanding as to A, what is our intended outlook on A, servicing that debt, and B, the maturing debt. How do we intend on managing that given the very tight fiscal constraints that we have? Apropos that question, in the previous presentation, Eskom had shown positive, in fact, in the special appropriation that was made to Eskom and debt management, there were some significant improvements, which I thought was credit to the work that's been happening at Eskom. But if you relate Eskom's debt portfolio relative to our national debt, Eskom does then produce a significant risk. And I think as my colleagues have put the question about municipal debt, how are we exactly, what is the strategic plan, certainly from National Treasury's point of view, and maybe it's a collective question, how do we ensure that municipalities, particularly I think about a metro like Johannesburg, is beset with political issues as things stand at the moment. How do we ensure that where metros are failing to honor their ESCOM debt, that we don't imperil or distract the progress that ESCOM is doing in terms of its own fiscal sustainability, but furthermore, that ESCOM does not become a further secondary risk to our debt portfolio. So I'd like to understand that, because that is a political question rather than in some way some of the technical questions about numbers, etc., because it does speak profoundly to something that should keep us all awake, in essence, as it speaks to that. Minister, the question around one SOE, of course, we speak a bit about. Oh, let me just finish this point about debt. The last issue I want to put on the table is that, as it pertains to ESCOM, of course, one of the debt, in the presentation, it states the fact that we have a $1 billion hold that was set aside for renewable energy projects. Now, I'm wanting to understand, is that a hold or is that a benefit? Now, if it is and the reason I'm asking that question, Minister, if you understand me, is to say, at some level, we can renew our energy and focus on those projects. But when you look at whether those projects will produce the sufficient energy capacity that we need, because in the presentation that National Treasury tabled at the last meeting, the energy availability factor was declining, sure, not significantly, but I would argue, in the PPP conversation, of course, renewable energies are coming on board and it's part of Operation Vulindlela. Does it aid that question, or does it curtail our own ability to build our own power stations in order to increase the energy availability factor, but also ensure that we domesticate some of the financing that speaks to the issue of energy in South Africa? Because one of my key concerns is that we can accrue some of these funds that speak to renewable energy, etc., but curtail our ability to build bigger capacity going forward, which has a net effect. Sure, in the short term, it has some benefit, but I wonder whether in the long term, does it not produce the constraints that we need? So I'd like to get your strategic view on this issue, so that when the next conversation comes up about PPPs, about the energy renewal program, about all of that work, how do we what is the posture that we take, and how do we go from there? My last question, Minister, I think was the question around the post office. Now, I think my colleagues have raised the issue of where the post office sits, rural capacity, infrastructure, reach, last mile delivery. My job is not to argue the validity or invalidity of the post office. It suffices to say that there is a inter-transfer debt that sits between the post office and the Department of Labour, at least as per last presentation. Has that been honoured in as far as TERS is concerned, and whether, again, what the strategic view of the post office is? And the reason I'm asking is because the Portfolio Committee on Digital, I never can, communications, etc., I never can quite fully remember their names, had an engagement with this particular portfolio, with our standing committee on appropriations, with the view of asking the questions whether do they believe that there needs to be more appropriation going into the post office or not. Now, I ask that question because as we prep towards the medium-term budget policy statement, these things are going to matter in our conversation. So I guess my questions, in essence, speak to the broader issue of debt management, the broader issue of what we are doing around the post office and that TERS issue, and then ultimately where ESCOM sits. I might have some questions about, which I've written to you about the PIC board and its process of appointment. So if you will indulge me, maybe you can respond to that. And then obviously you had mentioned in your budget statement in February, or whenever it was finally tabled, that there may be some special expenditure that is coming up now. Of course, we know one was the national dialogue. Are there any other ones that we can anticipate going forward? Because I think forewarned is foreprepared, and that might be helpful. So, Minister, with those questions, let me allow you to proceed, and then we can go from there. Yeah, Bule. Sorry, I think you are. Oh, there we go.
You want us to respond now?
If you can, I would appreciate it.
Let me start at a broad level. There are officials that are going to answer you. Babash is on the line, largely on the state-owned enterprises and the ESCOM issues. Let me start by saying we would appreciate this document referred to by members that is going to be a working document between us and the committee and be able to track us. It gives us and it's going to give us better information in the sense that and preparedness and probably raise the level of debate because we'll probably not respond to each and one of those issues. We'll single them and therefore have a detailed discussion on it. The second point I want to make, we should be careful about the numbers over under expenditure or any of those things. You'll recall that the budget was approved on the 11th of June. And my suspicion, departments were cautious in spending before, in whatever expenditure we're doing before the actual adoption of the budget. So I think at this stage, I'm taking a conscious, kind of a careful judgment on the overall expenditure in the light of that discussion. But the officials are going to answer these questions. In terms of the spending reviews, you'll recall that eventually we came up with what is called targeted responsible spending, where we're going to each and every it's part of what is the spending reviews the colleagues are referring to. And for the first presentation of this thing was presented in the cabinet combat yesterday. It's not an easy task. It's a difficult task. It's not unlikely to yield benefits tomorrow or in the next fiscal year. It's going to take a while. The way I store things. I don't know what the currency issues with DECO. We discussed this thing in the Treasury Committee because they wanted extra money in the adjustment because of the currency fluctuation, and the number is extraordinary, about 493 million. The question you were asking, how much differential has occurred between the rand and the dollar between last year and now? Because the rand has been always hovering up around 17 point something there, and even now. We're still engaging DECO on these numbers. The other thing which makes our job difficult, when we report the performance of expenditure in aggregate. And when we do that, we report in expenditure in aggregate. And we assume it's going to help not only the appropriation, it's going to help all other committees to exercise oversight in their oversight function. Because let's say, for instance, SANPA, we would assume that the Environment Committee would then have this information to be able to exercise oversight. I'm making that point. I'm not saying the team should not answer the questions. There has been a discussion about the debt issue, and one member says, how does it benefit ordinary members? Surely, there are two aspects. to the debt. When we table a budget, we table a budget with a deficit, which means that the shortfall expenditure is above the revenue. There's a shortfall. That gap we fill by borrowing, and that borrowing is financing the activities of all South Africans, including the ordinary person the honorable member is talking about. There's a related question, and that question is, from Honorable Maiman on the debt. I want to deal with that and finish with it. And that it is debt management. Debt management, it's a complex issue. The team borrows money under different instruments on a weekly basis. It has got fixed rate bonds, inflation-linked bonds. All of those instruments are at their disposal. They borrow money every week. When they do a gross borrowing requirements, they make a presentation as of a gross borrowing requirements. And the gross borrowing requirements, they factor in any redemptions that are going to take place in that particular year. In other words, which maturities are going to take place in that particular, they are factored in the gross borrowing requirement. There are different instruments of doing that, refinancing, switches, and all of those things. So those things are catered in our borrowing requirement. I want to touch on the subs issue. First thing I did when I joined the government was to delve into subs, because I've been worried about the crime in this country. And the minister says to me, if you look at the police, they are less than what we have in 2010. So we need more police. Honorable members will recall, if I'm not mistaken, we have provided with additional funding for about 20,000 police in over the medium term. What is also a problem, which we may see as underfunding, which over time it may be rectified. If we see the unfunded post, or if we see their posts in subs that are funded but not filled, that's why you would see the underspending. It looks like underspending. The problem with subs, they don't. And one individual lives today, they replace, and one individual tomorrow lives, they replace. What subs does is to wait for a critical mass, because when they recruit a critical mass. So you'll see that if they recruit, they probably recruit 1,000 or 2,000 at a go. And then that closes that gap. And that goes to the training. They take people to the training. What I did not understand is a question that talks about question that talks about pension benefits, how people going to honor it working. Because in the public sector, we pay our pension benefits. We've not even exercised what the actuary said in the fund. They said, this is how things happen. If they are projecting a deficit in the fund, they want us to close that gap by increasing contribution. If it project a surplus, they then said we must pay less contribution. They said in the pension fund must pay less contribution for 2 years. We've not exercised that yet. So the public pension fund is not in any threat of being in underspending in terms of pension contribution. The post office, the team is going to respond to it, and it's going to respond to it. Other than the fact that there's a business rescue team, which is supposed to do a business rescue for the post office. And my question was, once you finish, what is that post office going to look like? What services will it offer for it to survive in the long term? I think I've not had a proper answer to that question, because part of what is happening globally, everybody has turned most of their processes into logistic company. If you see your DHL today, was a company. Fed Express was a post office which has turned into a logistic company. So I don't know what this post office was thinking about, what kind of post office is going to emerge. I'm not getting that answer, I must be honest. But in terms of funding and other things, the team can respond to that. But in most of the detail, for all municipalities, there's surely no doubt that there's been a significant improvement in ESCOM of the investment of capital injection we're putting into ESCOM. Because of that improvement, we've been able to save about 30 billion. So they've done well in that regard. Done well in that regard. And so far as the debt to ESCOM, I think then we had that incentive. It has got its pros and cons, which we provided an incentive to all municipalities in order to link that incentive linked to smart meters. What Minister Ramaphosa has done is introduce a different other incentive, which he calls a distribution agency agreement. Two of those agreements today. The first one is Alute Apofo, in which ESCOM takes over the distribution in that municipality, and they've got an arrangement as to how the municipality benefits in that regard. So we're trying to explore many options in order to save this thing. The debt to GDP ratio, we will be tabling something in you're correct, our target, we said our target is 72.2. We're going to peak next year at 72.2. Whether that, in the light of what is happening in the finances and the global environment, whether that number is achievable is something we're beginning to progress as we prepare for the medium term. And we'll be able to table a number during the medium term. There are differences of measurements between ourselves and the IMF and between ourselves and some of the rating agencies. And we accept those differences of measurement. That's why they come to 80% and will come to a lesser amount. But let me allow the team to respond. Rabesh, Rubric, and Anna.
Okay. So, Minister, we have the team online. So we'll start with the expenditure items and we'll go Ms. Wilson, Ms. Madiba, Dr. Picha, Dr. Randela, then I'll come in and then Rabesh will come after me around in that order. Thank you.
Chairperson and honorable members. My name is Gillian Wilson. I am the Chief Director in Public Finance. Just to respond on the question on DIRCO, it's important to note that the compensation numbers for DIRCO also include the locally included personnel that provide support work in the foreign missions. So that amount for salaries for the locally recruited staff must also be factored in. So it's not just like a straight line calculation. We need to factor in also the foreign allowances that is paid to employees that work in the foreign missions. We have done a spending review on the spending on compensation in the foreign missions. That led to DIRCO closing 10 foreign missions. We are extending the spending review this year to look at how further the number of the compensation for foreign missions can be reduced. With regard to the over expenditure in home affairs, it's important to note, as the DDG has indicated, that the over expenditure was due to invoices not being paid in the previous financial year. It's now paid now in the first quarter. That is just for the department to avoid unauthorized expenditure. It also included some expenses on your civic documents, because I think we do get a part of the budget during the adjustment budget with regard to expenditure of your civic documents, and that we get in December, January the next year. So there's always a backlog in terms of expenditure in your civic documents. I think that covers my question. Thanks, GDG.
Lebo, will you please come in?
Oh, thank you very much, Chair. I will start with the first question of the NEF. Chair, the NEF, the reason why there has been an increase in the, let me get the right term, an increase in the unbudgeted benefits is because of the people that have been leaving the entity, resigning, and the entity having to pay the severance packages. The number of the entities, employees that left the entity, was unanticipated. Obviously, there would be some funds that are budgeted, but the number that came through was more than what was initially anticipated and budgeted thereof. Hence, we saw an unbudgeted benefits there in the presentation increase in that aspect. It's because of people resigning, and normally, this you wouldn't, anticipate, as the employer, when people would want to leave. But, we caution the entities that they should be ready and ensure that they've got sufficient amount budgeted for this eventuality. The other one, Honorable my money, is the one of the SANParks. The SANParks, the underspending on Q4, actually, when we come back for Q1, you will see that there is actually an improvement. In Q1, the overspending thereof of more than 500 million was because the entity in the past 2 years, they experienced the budget cuts. So what happened is that when we introduced the budget cuts and we gave the departments the discretion to identify where they will distribute the budget cuts, SANParks was one of the departments that were entities that was identified. Actually, the department decided to distribute the cuts on government grants towards their entities. So SANParks, in terms of their grants, they were affected with a subdued grant that was not able to cover, all their cost. So that was the key issue. And also on the issue of the own revenue from the tickets and so forth. But you will see in Q1 that there is a reversal when we come back, that landscape has actually improved. On agriculture, the underspending of 89%, where Q1 there was an underspending of 11%. the variance being 89%. You will see that when you look at land reform and rural development, there was an offset, which there was an overspending there of more than 200%. Is because of these departments, they have unmatched due to NMOC. But the systems, linkages, the systems, but the bus system, particularly the PESAL, was still linked. So they were in the process of delinking their systems so that, agriculture can have its own individual reporting system independent from the land reform and rural development. So you'll see that this one, while it underspent, the other one has overspent. We more or less the same amount. So it offsets one another, and it's because of the NMOC system. Thank you, Chair. I think that should be all from my side.
You can go next.
Thanks, and good morning, Honorable Chairperson and honorable members. My name is Mashudu Bija. I will be dealing with the questions that were addressed to health and social development. So the underspending on health is mainly due to a technical issue, especially in the first quarter. So expenditure related to the health facility revitalization component of the National Health Insurance is generally recorded in the suspense account and only recorded in the basic accounting system once the implementing agents of the grant have submitted proofs that the actual expenditure has been incurred. So basically the department does transfer money to implementing agents, and only when the implementing agents have submitted a proof that expenditure has actually been incurred, it's only then recorded. So hence the technical issue of 1 billion rand underspending in the first quarter within health. On the issue of social development, there was a question by Honorable Siate on whether National Treasury has verified the decline in grant numbers, in grant beneficiary numbers, and which specific social grant is seeing these declines. So yes, I think the underspending, yes, is mainly due to decline in beneficiary numbers, but specifically it's mainly due to Tata income verification by SASSA. As you know, honorable members, I think when we were considering the 2025 MTF budget, you will recall that the Department of Social Development and SASSA, they did come and make a presentation before this committee, especially on the conditions that we were planning to impose in terms of Section 4 of the Appropriation Act. And indeed, some of these tighter income verification are starting to yield some benefits. We are starting to see decline in beneficiary numbers, especially within the child support grant, which is one of the grants that sort of first adopted or implemented the conditions that have been imposed in terms of Section 4 of the Appropriation Act for income verification checks using various databases that we have in government and outside of government to ensure that we balance between inclusion errors and exclusion errors in the grant administration. And I think for us, we continue to make sure that there is a balance between protecting the poor and the vulnerable, and also excluding those that should not really benefit from social grants. And hence you are starting to see decline in numbers and savings that are coming into the system or in the grant system. Thanks very much, honorable members and the chairperson.
Good morning, honorable members. It's Rendani here. I will be dealing with the questions in relation to subs raised by Honorable Sigede. I will be attaching numbers to the responses provided by the Minister. If we look at the SAPS establishment, SAPS has got an establishment of about 188,000. And in Q1, we have got vacant post of about 2,003. As we speak in the current financial year, SAPS have got around 5,500 trainees. And one of the question was that we need to come up with the timelines in terms of when this post will be filled. I can say out of the 5,500 post, a vacant post, about 1,918, the trainees completed their training, meaning that they were absorbed in August as constables. The balance, which is about 3,582, they will be graduating in December. So they spent about 9 months in colleges. And during that period, you will also have other members exiting the system. So meaning that, Honorable Chair, you will hardly have a department at full employment. And when we budget for personnel, we also budget for complementary inputs, or what we normally refer to as pools of trade, goods and services, things like stationery, capital equipment like laptops, guns, etc., etc. So that's in relation to the filling of vacancies in SAPS. Thanks.
Okay. Honorable Chair, I'm going to do some of the kind of things that are cross-cutting and that the colleagues haven't answered. Let me just say, just on the pension contributions and the pension benefits, Honorable Bateman, the Act, the Public Sector Pension and Related Payments Act, only came into effect on the 3rd of September. So we can't report on a direct charge that didn't exist in the first quarter. So we will do that in the second quarter, and you should see that in the National Revenue Fund numbers coming up. It's also on the table on the direct charges against the National Revenue Fund. I think it's important to understand this in the context of what was the projection. So even though our payments on debt service charges are not necessarily on a straight line, they are against the projection depending on what happens within the portfolio and our obligations within that portfolio. So if you look at that against the projection, we are only spending on the directs on debt service costs was only 900 million rand less than projected. And that could be for a range of reasons in relation to some of our inflation-linked instruments, or some of the other kind of cash management issues that would allow us to kind of, I don't want to say underperform, but to kind of be below the target that we do have for that first quarter. Then to Honorable Mokonto on just kind of dealing with financial misconduct and underspending, and this probably relates to a whole range of questions that was asked by Honorable Waitland and Honorable Sekere, is just in understanding how the financial governance system is built. And I think we have that, I think it's in slide 99 where we explain what this looks like. So section 38 and 39 of the PFMA sets out the accounting officer responsibilities. An accounting officer in this case is the Director General of a department, and they have various responsibilities in relation to the efficient and effective use of funds. So the question of underspending is whether we can define underspending, or in this case, lower than projected spending, because it's only underspending at the end of the year against the actual appropriation. So the lower than projected spending as something where spending doesn't go according to a plan, and whether that can be defined as an inefficient and ineffective use of resources. And a breach of section 38 of the PFMA constitutes financial misconduct in terms of section 81. A similar provision sits for public entities in sections 50, 51, and 51. And financial misconduct is then defined in terms of section 83 of the PFMA. The Treasury regulations then sets out what to do when there's alleged financial misconduct, and that lies with the executive authority. So the Treasury doesn't have the authority to charge anybody with financial misconduct, but the Treasury does have some say in how a financial misconduct investigation should take place. So it's a fine line, I suppose, on what an executive authority may deem as financial misconduct when it's the accounting officer who's deemed to have committed the financial misconduct, but also when the accounting officer has to do an investigation if it is an official within the department. So how we usually deal with all of this is there's the component around how Treasury regulations for departments, and I think it's 31 for public entities, responds to all of this. Financial misconduct in relation to unauthorized expenditure. And unauthorized expenditure is at the end of the financial year when there is overspending on a vote or within a main division of a vote, so that's a program, or it is not consistent with the purpose of that allocation or that vote or the main division. And that goes through a parliamentary process because Parliament authorizes the budget. The budget is an act of Parliament. And if a department spent more than what was approved by Parliament, only Parliament can regularize that through the process that we then run through the Committee on Public Accounts. Then, Chair, just on issues that was raised, just in relation to how we report on you, we definitely welcome a session with you on how we want to make this report fit for purpose and to meet your needs. So, there's various references that we made to a strategic plan and a rubric that the Parliamentary Budget Office is helping you with. If there's any way that could be shared with us so that we can define how we do this. We are getting ready because the second quarter has just ended and we are 5 weeks away from submitting the second quarter reports to you. We are getting ready for that, and it would be useful to see that sooner than later so that we can find a way to adapt the report to meet your needs. And similarly with the presentation that we then make. There was a couple of issues around procurement that was then raised. Both from Honorable Sekede and in relation to the reference that Honorable Wakeland made on the Tembisa Hospital. And again, this comes back down to accounting officer responsibilities around planning and the execution of that budget. I mean, we have a system in place where procurement plans have to be put in place. There's plans for how budgets must be projected and how for that, and the assessment that we then make. So when we come to this committee, this is signaling, where you do see these deviations from plans, signal something that is wrong within that department. And sometimes we ask the questions about it, but sometimes, this is up to the accounting officer to be held accountable for that. And as I explained, not that we don't have recourse, our powers around what to do around all of this is limited. We do have the necessary forums, whether it's the supply chain forum that we have for departments, we have the CFO's forum, we have there's the public entities or the state-owned companies procurement forum, and those are the things we try to find mechanisms that would help the relevant officials in making this work better, that would allow them to achieve at least the responsibilities that are set out for accounting officers in the PFMA. Let me just check if I have everything. Oh, and then just on Honorable Siati's question around government spending and growth. Just looking at second quarter GDP numbers around all of this, there's a couple of interesting things. So government's consumption has been a key driver of what has happened on the GDP expenditure, on the GDP outcome. So it's actually contributed to positively to the GDP number. The underperformance in GDP is really around gross fixed capital formation. So this is fixed investments, government infrastructure programs, but I don't think it's just government's infrastructure programs, because about 3/4 of fixed investment in the economy is actually done by the private sector. So while there has been decline, so the concerns really around government spending and government underperformance in relation to GDP is really within the infrastructure program and not necessarily on consumption, because consumption contributes positively to GDP, or at least in the second quarter of this year, it did that. So the concern really should be how do we deal with all of this in relation to infrastructure. We do have various infrastructure reforms that we had outlined in the public sector infrastructure chapter in the MTBPS last year. We will be doing updates to that for this MTBPS to look at how we are able to help turn things around within the capital investment space. I'm going to hand over to Ravesh to answer the questions around Eskom, the debt, and other state-owned companies. Thank you.
Okay, perfect. Thanks, Lorika. Good morning to the honourable members, to honourable minister. So there were two questions on the funding side, and there were another two questions on the SOC. So just to supplement what the minister has outlined in terms of the funding. So in terms of the questions that were raised around how do we then service our debt servicing costs and the maturing debt in the next few years, I would, refer the honourable members to table 10 of the 2025 budget review. So that table basically outlines the gross borrowing requirements, which then includes exactly how we're going to fund, our funding requirements for the next year, which includes debt servicing costs and, also maturing debt. And that table then outlines exactly how it'll be funded through a combination of treasury bills, the combination of foreign loans and also bonds, and also through cash balances. So I think it'll be helpful just to go to that. Maybe in our next presentation we can go through that detail as well, just to explain how that's actually funded in a bit more detail. The second question just around the 1.5 billion US dollar loan. So that loan is from the World Bank. And those are, actually concessional loans, which is obviously much cheaper than your normal funding that you get from your fixed rate notes or your inflation-linked bonds and so forth. So those obviously, in terms of that specific loan itself, that's basically being used for energy security or for energy type funding. So that funding obviously still has to be, will be concluded. And I think Wanga and the team who presented at the 9th of September, presentation will give an update in our next presentation to SCOA. Just around, then moving across to the two questions on the post office and Eskom. Just on the post office, just to augment what Minister has outlined, is that at the moment there is that 3.8 billion rand ask, and obviously we are going through the budget process for that process to understand exactly, whether that whether the funding will be approved or not, and obviously that will be the outcome of the process as I've outlined. But I think just to supplement as well is that we are meeting with the post office team, with DCDT on a regular basis, just to unpack some of the issues and how do we look and how do we secure a, let's call it a future state, not the end state, a future state of the post office should this funding be provided, because I think that's key in terms of what will the future post office look like, and also bearing in mind that there have been these significant changes in the industry itself, and how do we then ensure that if funding is provided, that the post office will remain financially sustainable and that they won't be coming back to the fiscus like they've been doing over the past 10 or 12 years. The last question specifically on Eskom, I think Minister has addressed the issue, on the Munich debt, where there are, the distribution agency agreements being concluded. I think that's quite key because what we're seeing is that with the Munich debt now, I think it stands, I think the recent amount that we have is around about 100 billion rand, and it's increasing quite significantly, and that obviously has to be arrested at some point fairly soon, because then that in a way does not help the unbundling process in terms of the distribution company, because when you unbundle distribution, a large obviously part of that relates to how do we then ensure the sustainability of distribution with a Munich debt of that amount of 100 billion rand. So until we arrest that increase in Munich debt, it'll be very difficult to have an unbundled distribution company. So in terms of the future planning for Eskom, in terms of how do we then unbundle in terms of the reforms that could, well, at the moment, it is providing a major challenge. So I think the distribution agency agreements will play a big part in ensuring that that Eskom itself as a holding company, but also the distribution, the unbundled entities will remain financially sustainable. I think that's it from my side. Ulrika and Honorable Chair, over to you. Thank you.
Yeah, that's it from our side.
Firstly, thank you very much, Minister. Our commitment is to, once A, the document on reporting, and B, what then follows on from that is when we schedule our next meeting and the request for information will be presented in the manner that departs from the strategic document, the nature of the rubric, so that we can enhance the nature of deliberations that take place. So I will share that with you urgently and as soon as possible. The strategic document, I think, is being worked through the Parliamentary Committee, the House Chairperson's process, but the rubric question has been worked with the Parliamentary Budget Office. And so both those, we can furnish you with those respective documents so that when we have our next engagement, we can proceed from there. Suffice to say, Minister, let me thank you for being here today. Let me thank the team from National Treasury for the responses that you have supplied and certainly the presentation. And I really appreciate these types of engagements and certainly look forward to our next one. And to the honourable members, to your questions, should there be any other supplementary ones, I will request honourable members to write to me so that we can ensure that as part of the request for information that we go into our next meeting, we can proceed from there. So let me thank everybody and thank the National Treasury team, and so that we can move on to the next presentation. Thank you very much, Minister. Thank you to the team.
Thank you very much, Chair and the members of the committee for understanding. Thank you very much.
Much appreciated. Can we then, at pace, then proceed to the next presentation for today, which is being put together by the FFC? And I noticed that the chair of the FFC is on the call, Dr. Mbava, and I look forward to the engagement. May I welcome the team from the FFC, welcome Doctor, and the chairperson, and then hand over straight to you to make any opening remarks, and then we can proceed to the presentation in that light.
Thank you. Thank you so much, Chairperson. Thank you so much for welcoming the FFC to this meeting. Chair, we thank you for inviting us to present our recommendations for the next financial year. We are going to just go quite quickly, but in-depthly, obviously, on some of the key recommendations that we are making on the submission for the division of revenue for the next financial year. As you would rightfully know, Chair and members, the FFC, 10 months before the final budget is tabled, makes key recommendations that have to be considered by the executive through Parliament. And these recommendations have an impact and implication as well in terms of the budget and the key priorities thereof. So it will be very helpful that members engage with these recommendations and see where they can assist, if possible, to ensure that these recommendations are considered. The key thing here is that the recommendations must be considered by the executive. So I don't know if our presentation is being flighted by the FFC team.
Not yet, Chairperson. I was sending a chat to the Honourable Chair to give me permission to share our presentation.
Mashile, would you be able to assist in this regard so that we can go from there? And
Yeah, the rights have been conferred to Nosisa and Chain already, ne? They are co-hosts.
Okay, Nosisa, can you go ahead and flag the slides? Thanks so much, Chairperson.
Yeah, no, it's fine. They're covered. What did you say, my brother?
Thank you so much, Chairperson. So we are going to go through the slides. Our presentation today essentially will give you a sense of our submission for the 2026-27 Division of Revenue recommendations. We will look at various issues at a macro fiscal level, the national appropriation level, and also at subnational level. Next slide. This slide just essentially repeats what I've said earlier on, that we are governed by the Intergovernmental Fiscal Relations Act, that we need to make these recommendations 10 months before the budget is tabled, and that these must be considered by the executive and parliament. Next slide. What is the primary goal for us to engage today? Just to ensure that Parliament also fulfill its oversight role as set out in section 55 of the Constitution. There are obligations.
Sorry, Honorable Chairperson, I apologize. Mashile, can I ask you to please mute your device, because we are struggling to hear, please. I apologize, Chairperson. If you can then proceed, we can go from there. Thank you.
Thank you so much, Chair. So the submission that you are making to yourselves, Chair, is to also add value to the deliberations of Parliament as it reflects on the 2025 medium-term budget policy statement, which now is known will be tabled in the next few weeks. And also to assist as well in terms of understanding and appreciating the 2026-27 Division of Revenue Bill, which will emanate after the budget has been tabled in February, and also the fiscal framework and the revenue proposals thereof. Next slide. There are secondary reasons as well that we might want to table this is to also ensure that there is fairness and equity in the budget process, and that we enhance transparency, we demystify essentially any complexity with regards to the division of revenue process, and that any calculations, any assumptions that are being made, these are clearly understood, and that there is public trust. We also want to build fiscal capacity as well. And this presentation also, we hope that it can also act as an educational tool to deepen the MP's understanding of intergovernmental fiscal relations, also improve the quality of oversight, and also the debate that emanates from these recommendations as well. We also want to highlight provincial issues. These can be formally brought into this debate by evidence and data that is backed by independent analysis of the Financial and Fiscal Commission. Next slide. So we have made some sort of category of the recommendations to just synthesize them to see now which executive departments these recommendations will be most directed to. So we are of the view that, having looked at our recommendations, these are specifically 60% of these recommendations pertain to intergovernmental coordination and municipal capacity building, and therefore the portfolio portfolio committees that responsible for those executives, essentially the Committee on Cooperative Governance and Traditional Affairs, will have the lion's share of oversight over these recommendations. Some of the recommendations also speaks to various departments that you'll see as we go through the slides as well. Next slide. This essentially is the crust of our recommendations. We speak on climate change issues. We also make recommendations with regards to infrastructure and public-private partnerships. We want to understand the balls and nuts of what are the public-private partnerships and the challenge thereof. And also we look at infrastructure-led growth at a subnational level. And then we also assess the performance of coalition-led municipalities as we are going now to local government elections next year. It will be important to understand the implications of some of these recommendations as pertaining to that. And also we look at the issue of urbanization, because we've seen in the last few years that there's been fiscal pressures in our big metros. And what is the fiscal implications of these and the budgetary pressures with regards to accommodating this mushrooming urbanization in our big metros. Next slide. This is just to mention here that our recommendations are always guided by the constitutional mandate and the interest to ensure that the national debt of the country is protected, and that the national interest and provincial governments and local governments are able to deliver on their mandate. Next slide. So I'm going to pause here, Chair, and give the platform to the Head of Research, who will give us some of the technical analysis on our submission. Over to you, Chair.
Thank you, Chair, and good morning, Honourable Chair and Honourable Members. My name is Chen Sen, Head of Research. I think South Africa, we tend to think of it as, especially when we talk at the macro fiscal and the budget framework of the nation, we seem to think of South Africa as just one thing, or yes, indeed, view of the unity and of one nation. That is correct. However, as is with all all countries and regions, we are actually quite diverse in terms of South African and also the local social economic context. South Africa is also highly concentrated, although there's another debate about industries, but I submit that fundamentally that even on the front of just where population and densities and the structure of activities, not about industry in particular, but activities, where are the people at, are also quite significantly concentrated. And it's not necessarily a bad thing. It just means.
My apologies there. Honestly, it is becoming frustrating when members do not, or anyone doesn't mute their device. It really doesn't help the flow of the meeting. If I can request and stress again that if you can mute your device, we might soon have to move towards removing people off a platform. Thank you. Chen, you can proceed.
Thank you, Chair. As I was saying, that's not necessarily a bad thing, where how the populations and therefore the demands and economic activities are distributed fundamentally for those various reasons of economies of scales and also efficiencies from a geographic point of and the close proximity of activities point of view. It just means, though, that we do need to make and take into account of in terms of our distribution and allocations of resources in order to support those activities. I submit that then, which is a perfect context for the division of revenue, because ultimately, as my chairperson earlier pointed out, yes, our recommendations is geared towards certain particular committees and so forth, but because it is division of revenue as in one pot. However we cut it, it's ultimately one size and one of the pie that we are cutting it from. Even the special bailouts or transfers or conditions of grants to earlier, as we saw, to SOEs, that ultimately comes out and will therefore definitely have an impact on the allocations to other, whether it be spheres or the particular departments or entities of the government organs and states. Next slide, please. And moving forward, I just want to emphasize further that the distribution of that population density on the socio-economic front, therefore, also has got implications. In particular, if I draw your attention to the furthest right column, that is the number of employed individuals per one unemployed individual. So in other words, obviously the higher the ratio of that employed-unemployed ratio, it means that lesser the burden, one may argue, or the disparity in terms of, or the pressure and that stretch between those that are earning an income and those that are not within those provinces. And so the lower the number, it means that for instance, Eastern Cape at 1.5, it means essentially that about for 3 individuals that are employed, there are about almost 2 individuals that are unemployed. Next slide, please. I want to launch forward. I think this just shows also again that diversity, the great dispersions of on the infrastructure side, and particularly on the road infrastructure. Next slide. And as we will move quickly, I want to emphasize into our chapters. Honorable Chair, members, this year, for the submission of Division of Revenue 2026-27, 2 points I'd like to bring out. One is that, yes, in terms of the legislation, we are 10 months before, but in fact, I even would say that I'll beg the question, why 10 months? And I believe, and I think the reading on spirits of the legislation and in terms of the Constitution is that the issue of the budget process needs to have started with our recommendations of the FFC and before, so that it can inform the medium-term budget policy statements, or as National Treasury colleagues may like to call it, the mini budgets before the main budget, that is February. I think that is incredibly important to notice, if I may, because our medium-term budget policy statement sets out the medium-term fiscal trajectories, projections, as well as the medium-term expenditure framework called the medium-term, right, NTEF. Of the next 3 years. Not just that, but as earlier we also appreciate through the committee oversight briefing and the engagement from National Treasury with Honorable Minister on the expenditures up to the quarters. Is the purpose ultimately is so that as we are charting the waters of the medium term, we got to look at what has been the expenditure activities in actuals up to this point, so that we don't make that mistake as FFC, we have in through our analysis and our budget submission have been pointing out, is that how is it that sometimes we see this under expenditure and yet we still allocate more money, so that we even effectively create self-fulfilling that prophecy of under expenditure at the end of that financial year. So the two needs to talk together. The actual expenditure to the budget itself, and therefore this medium-term budget policy statements is ought to therefore take this sets our submission on the divisional revenue into account with its recommendations. It's number two, point number two I'd like to bring across. This year, you'll see, as my chairperson earlier also gave an overview of, is on the various chapters of the submission on the macroeconomic issues, like this one, chapter 1, on the macroeconomic consequences of climate change, going into the national and on the PPP framework, which it also then permeates into provincial and the local in terms of municipal activities and issues thereof on the coalitions and urbanization. Let me assist in terms of chapter 1 in that it's broader and the implications is much more significant actually than one might think. For instance, and I'd like to leave with a little bit of a brain teaser before I hand over to Nosisa, is that whilst we look at this matter of climate change and the macroeconomic consequences thereof, there is something more to it, and that is more practical, most practical, I would argue, as we read into this chapter. Take, for instance, earlier, as we heard and discussed through the committee engagements on the SOEs and the World Bank's loan, that is concessional loan to our government for just energy transition projects. This may seem innocuous in that yes, it is a rather cheap loan that you can borrow, but I would argue that and submit to honorable chair members to consider this loan and the activities and the trajectory of having taken on this so-called just transition for the purpose of climate change and accommodating for all carbon emissions and so forth, is that it fundamentally is asking or attempting to change our industrial construct and the economic composition base of our energy sector. And with that, it has implications for our industrial sectors across the entire economic spectrum of activities and industries. Why I say that is because, of course, our energy sector historically has always been about burning coal. And so that with this loan and with this so-called economic and or this climate change and the concessional loan, it's ultimately moving us, whether we like it or not. And it seems like it's not exactly a voluntary exercise unless we do think of ourselves as somebody who maybe is green on the climate change topic. But I'd say that we do need to be careful that we do not prematurely being compelled to transit through this just transition energy and this cheap loan that we get from the World Bank or wherever to have moved our industries too early into this different and this renewable energy move, such that it is pricey, it is expensive, and also it has got its own implications for our industrial development. Because one thing about solar energy or any of these renewable energies is expensive, it's capital intensive, as well as it is volatile because you don't sit with, sun shines every day. or you don't, the wind and the voltage and the currents that it creates, it's not stable. And so we also need batteries thereof to store these energies. As you can see, the matter, this climate change impact is one that is so macroeconomic and maybe sometimes seem far-fetched from the division of revenue topics that our submission is about. It really does have other implications and leading towards, and that this committee of conducting its oversight and responsibility of the safeguarding our financial management and the sustainability of fiscal framework, it's incredibly important to be cautious of such significant, sensitive issues. Thank you, Chair. Let me hand over to Nosisa, and we may come back for vibrant, I'm sure, discussions thereafter. Thank you, Chair.
Thank you, Chair. Good morning, Honorable Chair and Honorable Members. My name is Nosisa Kwama, and I'll be taking you through the 5 chapters of our submission. These chapters seek to examine the macroeconomic effects of climate change and examine the sectoral interdependencies to identify sectors in the South African economy that are more vulnerable to climate-induced shocks. Moving to the findings, to contextualize the climate change in South Africa, the trend line shows that the daily average temperature in South Africa have increased since 1950. High temperatures in 2015 to 16 signaled drought conditions, which impacted agriculture and triggered wider economic consequences. The results here shows petroleum and fertilizer industries are vulnerable to climate shocks like drought, highlighting sectoral interdependencies. The financial sector, which is a major GDP contributor, has strong indirect links to agriculture, making it vulnerable to climate-related shocks. And then moving to the recommendations emanating from this chapter, the first recommendation speaks to the need for coordinated efforts be made with international role players to strengthen international climate funding based on principles of fairness, and funding is proportionate to a nation's carbon emissions. Given the adverse impact that climate change can have on the fiscals, it is recommended that the fiscal credibility be restored to increase budget resilience to minimize the fiscal risk associated with climate change. The Commission also recommends that deregulation be considered in sectors that are more vulnerable to climate-induced shocks to reduce the risk of supply chain inefficiencies that could exacerbate the knock-on effects on climate change in the economy. In terms of the climate change policy framework, mitigation and adaptation responses need to be clearly defined and measurable and spearheaded by the Minister of Forests, Fisheries and Environment in collaboration with the Presidential Climate Commission. Finally, the Commission recommends that a clear approach be adopted on how to develop a climate-resilient infrastructure by the Minister of Forestry, Fisheries and Environment in conjunction with the Minister of Public Works and the Infrastructure, and also with the Minister of Trade and Industry. Then moving to the chapter 2 of our submission, this chapter seeks to quantify the role of infrastructure in economic development and understand the contribution of PPPs to South Africa's infrastructure development. Then moving to the findings for this chapter, the key takeaway on this slide is unless the PPP regulations are clarified and strengthened, the private sector participation will remain limited and the government will carry unsustainable risk. Then the findings on this slide shows that from 2013 to 2023, provinces and municipalities contributed 1.1 trillion, which is nearly 50% of the public infrastructure spend, showing they are key drivers, not just implementers. So the key takeaway here is that there is scope for triple Ps to be scaled up to bridge the funding gap. Then the findings on this slide shows that contingent liabilities and risk remain key challenges, with national and provincial departments bearing the cost when triple Ps fail, exposing the fiscals to high termination risk. Then the findings on the domestic case studies are so lessons from the South African lesson from South Africa. The key takeaway on this slide is that the common lessons are clear regulations, strong institutional capacity, and innovative financing, all critical for the South Africa to scale up the triple Ps. And then moving to the recommendations emanating from this chapter, the first recommendation, the Commission recommends that the infrastructure development should prioritize sectors with the greatest impact on growth and sustainable development, specifically water and energy. Secondly, the Minister of Finance, in conjunction with the Minister of Public Works and Infrastructure, should replace the current fragmented triple P framework with a clear, unified framework that defines triple Ps distinctly from the traditional procurement and clarifies risk-sharing rules. And lastly, the Commission recommends the National Treasury and the Department of Public Works and Infrastructure should ensure the triple P agreements have a fair and enforceable risk allocation to protect both government and private partners while reducing contingent liabilities. Then moving to the third chapter of our submission. So this chapter seeks to examine whether the infrastructure-led growth is being realized, particularly at the subnational level of government. Moving to the findings for this chapter, the key takeaway on this slide is that while public infrastructure investment has improved service delivery, progress is uneven. Some provinces advance rapidly, while others face structural challenges needing targeted support. Then, despite some improvement, spending remained below target, highlighting persistent challenges with fund absorption and project implementation at the local level. Then moving on the grant spending performance, the analysis reveals a major gap between allocated and spent funds, pointing to serious budget utilization challenges, whereas low spending highlights ongoing issues with municipalities' capacity to absorb funds and implement urban projects efficiently. Then the findings here show, despite the national effort, the lack of a single window for infrastructure coordination at a provincial and municipal levels remain a key concern, as these entities handle most service delivery. Then from the findings, the Commission makes the following recommendations. As means to a single window for coordination, the Minister of Finance, in collaboration with the Minister of Public Works and Infrastructure, should seek to establish a sub-national infrastructure coordination framework. This framework would be a crucial step in streamlining infrastructure development at the provincial and municipal levels, thereby reducing fragmented planning, duplicated efforts, and inefficient resource allocation. Secondly, to strengthen the link between infrastructure performance and the funding allocation, the Minister of Finance should introduce a performance-linked feedback mechanism in all provincial and municipal incentive grants. This mechanism would create a direct and transparent link between a province or municipality's performance and the funding they receive. This will ensure that grants operate as true incentives, rewarding improved performance and encouraging accountability. And then moving to the fourth chapter of our submission, given that coalition-led municipalities are increasing and are becoming a permanent feature in the local government, this chapter seeks to assess the performance of coalition-led municipalities. Then moving to the findings, the analysis focuses on provision of water services based on domestic consumer units, noting that not all the local municipalities provide these services. The number of municipalities with hung councils rose significantly from 2006 to 2021, showing fewer councils led by a single party. Then on the hung councils versus majority-led, the results suggest that municipalities with hung councils generally performed better in water provision than those with majority-led councils. However, caution must be exercised when interpreting these results, as the sample is limited and results capture the heightened risk of instability in coalition-led government. Then the audit outcomes are improved by 17% in hung councils and 14% in majority-led municipalities. With respect to this chapter, the Commission makes one recommendation that the Provincial Department of Cooperative Governance and Traditional Affairs and the South African Local Government Association identify key challenges and risks associated with hung councils, particularly in terms of the capabilities and performance of basic services. This is key given an increasing trajectory of municipalities with hung councils and that the country is heading to the 2026 local government elections next year. And there is a high possibility that the municipalities under hung councils will increase even further. Then moving to the last chapter of our submission, given the increasing rate of urbanization and service delivery pressures in most urban municipalities, this chapter investigates the impact of urbanization on service delivery to understand how metropolitan and other urban centers are coping with expanding service delivery mandates arising from urbanization. And then moving to the findings, the finding shows that metros like Johannesburg and Tshwane with high population growth also experience rising unemployment, indicating migration-driven labor strain. And then the finding shows nationally household without electricity dropped by over 2 million, which is 66%, highlighting the impact of programs like Integrated National Electrification Program and Free Basic Electricity. While the data shows progress, over 1 million households remain without electricity, highlighting ongoing service delivery gaps in dense urban and informal areas. The findings here shows that in major metros, informal settlements are growing faster than the formal housing delivery, highlighting a policy spatial disconnect that hinders the service delivery and planning. To address the urbanization challenges, the Commission make the following recommendations. Firstly, the Commission reiterates its recommendation from the 2018-19 submission on the division of revenue that the Minister of Finance should create an awareness of the land value capture fiscal instruments among large cities and extend the scope of the financial management grant to cater for the capacity building in the design and implementation of the land value capture mechanism. This is important because it gives cities a way to finance urbanization sustainable by capturing part of the value created by the public investment. Municipalities can finance infrastructure and reduce pressure on national transfers. Secondly, the Minister of Cooperative Governance and Traditional Affairs, in conjunction with the Minister of Finance, should speed up the review of the local government equitable share formula. The new formula must account for the urban growth as well as rising service costs and unique challenges faced by the urban municipalities. This is crucial to ensure that the municipalities have the financial means to match the scale of urbanization and deliver quality basic services. And lastly, the municipal councils should introduce innovative ways for their municipalities to generate revenue. This can be done through the modernization of the property tax collection system through digital valuation and automated billing system. Innovation in revenue collection isn't just about technology, it is about changing the culture of local governance and from dependence to self-reliance. I will pause here, Honorable Chairperson, and with your permission, I would like to hand over to my chairperson for the final closing remarks. Thank you.
And in closing, the last slide, thank you so much, members. We also have policy briefs that we have prepared that are a bite-sized summary of these recommendations. These policy briefs are available on our website for a quick download through scanning of your phone. Also, Chair, where possible, we will also appreciate if the committee can also hold the members of the executive accountable for implementing these recommendations as well. We also noted, Chairperson, that in the discussion earlier on with National Treasury, there was a question with regards to the spending on health. Yesterday, the Commission made a detailed presentation to the Health Committee on the performance and the spending of the health sector. And we made some strong recommendations there, and we have some findings as well with regards to the spending on the NHI and other issues as well. We can also share that presentation with the members as well for your own capacity building. Thank you so much, Chair.
Thank you very much, Chairperson, and thank you for the presentation. Both the voluminous document has been circulated to committee members, and seconded to that is that this particular presentation obviously has been tabled today. So we certainly look forward to the deliberations, and there are many questions. So I'm going to allow this to be treated a lot more like a workshop rather than just a presentation for accountability, so that members can ask questions and then we can have the engagements of that nature. So when members have got questions, you can raise your hands, I will recognize, and then we'll try and facilitate questions. We can have a few rounds and keep going, because if I'm correct, Chairperson, the intent is obviously for the work that happens in many of the recommendations that are here that begin to guide not only the work of the committee, but some of the engagements you've proposed, i.e. having a joint session with a number of the other committees to look at the number of recommendations, and as prescribed by law, that National Treasury are obligated to take consideration of the recommendations by the FFC, to which post facto the committee then holds the executive to account. So in that spirit, I do think a deliberation and an engagement will be helpful. So let me recognize members. If there are members who've got questions, you can put your hands now and I will recognize and go from there. Honorable Bateman. Okay, whilst other hands are coming up, Honorable Bateman, you can proceed.
Thanks, Honourable Chair. Thank you, Dr. Mbaba and Mr. Tseng and the other presenters. I appreciated the presentation. I was interested in your analysis of how the agriculture sector has a ripple effect on other areas of the economy. And I was wondering if you've done something similar for other primary industries like tourism, like mining, and whether you have any specific recommendations around government policy in these primary sectors where that policy could be adapted in order to enhance growth in those primary sectors. As I say, noting the ripple effects that they have on other areas of the economy. Perhaps something you could speak to, and also possibly topics for further research and recommendations. This is really for you, Chair. I know sometimes the National Treasury has interpreted the mandate of the FFC quite narrowly, and so has used that to not respond to every recommendation that they've made. It's been described as cherry picking. I wouldn't perhaps go that far, but I do think that narrow definition of the FFC's mandate means that not all of the recommendations do receive responses. And so I wonder if we, as a committee, could formally request that National Treasury does provide a response to each and every recommendation that the FSC has made. And then thirdly, on the slide about the findings on the state of public sector investment, it would be very interesting to see data, the very, very interesting statistics about the different provinces and the reliability and access to basic services. Do we have any historical data to see what the trends look like across the different provinces over the last, say, 30 years? I'd be interested to see what that looks like if it's mapped. And also there's one of the statistics is the percentage of households reporting water interruptions. Could you tell us how that metric is defined and how it is measured, please? Thanks.
Let me recognize if there are other members who want to put their hands up. I have a number of questions that I will put forward. So let me then take it from here. Firstly, let me thank the FFC for the presentation. I certainly think as a country, we don't often want to ask the big policy questions, but more than that, we don't ask what is the interrelation between policy funding, the measurement of outcomes, so that we're clear that what we are doing is either working or not working. So looking at the various chapters, I'm not going to join President Trump, who addresses the UN General Assembly by stating that climate change is the biggest hoax ever levied on human beings. The research that you've presented here does indicate increasing levels of temperatures across various sectors. Now, with that in mind, you then proceed on your chapter on climate change, etc. What I'm wanting to understand is that what it seems is that there isn't an allocation within budget that speaks to the ensuring or the insurance of infrastructure that then suffers as a function of some of the hazardous effects. So, and in my head, I have this bridge, this image of a bridge in the Eastern Cape. I think it's actually a road in Gqeberha that collapsed fundamentally because of heavy rainfall, as others would argue, as an outcome of climate change. And the reinsurance on that issue didn't seem to be budgeted for. And so when climate change or the effects come into play on public infrastructure, there doesn't seem to be capacity, not only for the rebuilding of that infrastructure, but certainly for reinforcing what new technologies can be applied. If the dictum is to assume that human intervention is part of the cause, and I think you raise a number of issues here on climate change, is there a thinking that sits that makes the argument to say, how do we convert much of government infrastructure into more sustainable renewable energy projects, such as whatever we do, lights, whatever we do? There doesn't seem to be a commensurate matchup towards that. And maybe in argument, it may very well be a question of, look, it isn't a significant contributor to climate change. Other factors are, be it coal, be it whatever. I want to agree with you, Chair. And that was precisely why I asked the question to National Treasury, which is to say you can accept loans on renewable projects, but it does impact your industrial complex. But more than anything, I would argue, maybe I'd like to hear your view on that, is that it limits your ability to build your own infrastructure on energy. So in terms of capacity build, what you get on renewables relative to what you could get, and let's take nuclear as a piece of technology. I'm agnostic about your environmental view on the issue. I'm just merely looking at the output of energy. I find that you can limit yourself in that regard. And the net consequence of it is that you can end up in what I think Germany went through in terms of their whole climate change approach now today. And obviously their partnership, the war between Russia and Ukraine, has had a profound impact on Germany's own energy security as it's sustainable. And I worry that South Africa is hurtling down the same track without thinking. On infrastructure, new infrastructure is great, and it's good for economic investment. I'd like to ask the presenter who spoke on that particular chapter and blended financing speaks to that. This question, which is infrastructure maintenance. Municipalities are notorious for not maintaining infrastructure. So what invariably then happens is that shiny and glossy is pretty, but maintenance doesn't occur. So if you are like me and you are in Soweto, you end up with what is then defined as load reduction, which is another form of load shedding, inherently because Eskom makes the claim to say you've got aging old power stations that sit there that were poorly maintained. Kelvin Power Station, I can go through a few in Johannesburg. And so the net effect of it is that because of the aging nature of your infrastructure, you have load reduction. And as an outcome of load reduction, economic activity in those communities is profoundly impacted. So I wanted to understand what the chapter's response on the very issue on infrastructure maintenance and infrastructure insurance speaks to. On the climate question, sorry, I forgot to include this. The issue at core about our Africa Free Trade Agreement and whether or not we think to, maybe you might let me know whether you agree with the statement or not, mitigation anyway is mitigation everywhere. So on conversations around carbon tax, on conversations around whether you look at other in the SADC region, is there a sense of collective partnership about how, as we drive towards sustainable development, we could be able to have mitigation that takes place in compensation for other areas so that we deal with a collective climate response as a question? Because as part of your recommendation, you are recommending domesticated issues and the coordination of multiple committees. But I didn't think, or maybe I might have missed it, I didn't see DERCO and I didn't see what happens as a continent-wide response, because I would argue if we are effective at, for example, when Mozambique were facing their floods, South Africa had to respond, which had fiscal consequences on the issue. So I wonder whether there isn't a coordinated effort and whether there shouldn't be an inclusion in the report as you have tabled it. Now, the other question I have is, you raise the question of urbanization. The dictum is that people move to urban centers is a historic doctrine, if I could put it like that. I wonder whether post-COVID and the introduction of technology, and the emergence of new industries, whether those industries are in the fifth industrial revolution, the impact of technology, what happens there in as far as decongesting cities? And that's not only a climate-related question, but it's a question of this issue that you raise about urbanization and whether or not, what happens to cities in terms of provision of services. Now, I happen to think that there may be, if research permits, a school of thought that says actually people might want to move away from cities, which thanks to the fact that we now can work on Zoom and there's many other things we can do, technology, that will lessen the need for people to find themselves working in concentrated areas in cities. Now, you might respond to that by saying, well, that's a long-term dream. The immediate crisis South Africa has is that people go to places of work, and so that's what it is. I'd love to hear your thoughts on that issue, because I think it will tell us a little bit more about your thinking about what are the future economies that South Africa needs to be exploring, and whether those economies will rely on the same historical developmental plan that is on the go. I think the conversation about coalition management in cities, I want to park it because, to your point, the research is insufficient in terms of its own sampling. At least that's what I heard. What I'm unclear about is obviously and naturally, how have we looked at municipal bureaucracy? Because, and whether there is a development of whether that municipal bureaucracy is able to survive coalition headwinds. I think trying to solve coalitions is, with respect, I think that sometimes when I look at the global practice, solving coalitions is hard work. Germany is proving the point. Many European countries are starting to prove the point, to say that, yes, coalitions have to be managed, but in truth, they can change. What should not be changing is the stability and the strength of your bureaucracy. And so perhaps maybe to look at the wattage that would come out. For example, when our committee engaged with Mangaung, as an example. Mangaung doesn't have a coalition from what if I recall off the top of mind. But in truth, I think it's under administration. It is probably the worst performing municipality. And frankly, I think that, that's not a coalition-led issue. It's just a fundamental failure of governance on the bureaucracy itself. And when I think about Johannesburg now, it's got a coalition dilemma that is facing up to itself. But I wonder whether it could not be solved by simply insulating the bureaucracy and making sure it works in that regard and survives these headwinds, because I think the headwinds are going to be with us for a while. Let me stop there, because I think there may be a number of questions that emerge as we have a conversation. And I think, you are correct. In the medium term, National Treasury have projected a 1 trillion rand infrastructure spend, which your report looks to where some of that has come through provincial and municipalities. All of that has to be put in localities. And I just sometimes worry that when there's a lack of capacity in municipalities, you can end up throwing money after bad, even if you talked about blended finance or any partnerships that go from there. So maybe some might be comments rather than questions, but I'd love to hear your responses as we go through that. And if other members have further questions, you can indicate by raising your hands. Chairperson, you can proceed. Let me hand over to you.
No, thank you so much, Chair. Maybe let me take on maybe 1 or 2 questions, but then I'll hand over to Chen and the other researcher who also presented. I think one of the questions you raised, Chairperson, is about the infrastructure, maybe at municipal level, which are poorly maintained, and what could be some of the reasons for that. So in our research, we have found that in some of these municipalities, there's no capacity to implement these infrastructure projects. And so the allocation then, or the budget allocation through the DORA bill, is through indirect grants. And so these indirect grants then are handled by the national department. So the national government then takes a lead in terms of implementing these projects. So what happens then is that when the infrastructure project has been built, there is no sense of ownership by the municipality or the people there. So it becomes a white elephant. And so it disintegrates and there's poor maintenance. So the question that we have to ask is that must we still continue with indirect grants as a way of capacitating municipalities to have these infrastructure projects, or must we capacitate the municipalities themselves to have project management skills so that they can be able to implement their own projects and then have ownership of their own infrastructure projects? Because what I have painted now is a picture of where we see these white elephants, big infrastructure projects at huge public money and taxpayers' money being implemented. But because the municipalities do not have a sense of ownership, do not have a sense of having a commitment to maintaining this, these become white elephants, and then they sort of are kind of disintegrating. So I think the bigger question then is to ask ourselves what is the impact of indirect grants when it comes to infrastructure projects? And how can we work with municipalities to ensure that they still have the projects that they must implement, but they can be able to do it themselves? How do we capacitate them? I think that is a question. On the other issues, let me just pause here and just ask Chen and Nosisa to come in. Chen.
Yes, thank you, Chair. Can I just ask Nosisa to go before me to answer any questions I should like, and then I'll take the remainder. Thank you, Chair.
Okay, Nosisa, any thoughts or insights on some of the slides you presented with regards to the question that we asked?
Thank you, Chairperson. I will start with the issue around urbanization that was raised by the Honorable Chair, where he said that post-COVID and the impact of the advanced technology might see people moving away from the cities. So I think, Honorable Chair, while the technology and post-COVID trends may spread people out more, they won't eliminate the need for strong, well-funded cities. Remember, the cities, these big metros still needs to fund the basic services for millions of people living within those cities, would depend on them despite the urbanization, despite people might move away because of the new trends that we see of people working from home. But also, I know that if you come from the deep rural areas, for instance, in the Eastern Cape, I will make an example with the Eastern Cape, where most of the time you find yourself without network. So you cannot take that risk of living away from the cities and go and stay in rural areas because you are working from home. You might struggle to connect. And at times you might find yourself frustrated. So I think even though there are changes, I don't think we are there yet to just say that people will start moving back, moving out of the cities. And secondly, around the issue of the percentage of households experiencing water interruptions. I think the South African statistic measure for the percentage distribution of households that reported water interruptions is defined by Statistics South Africa in their General Household Survey as follows. This indicator, which measures the functionality of municipal water supply services, captures the extent to which households that received water from a municipality had reported over the 12 months before the survey interruption that lasted. So more than 2 days at a time or more than 15 days in total during the whole 12-month period. In short, a household is counted as having a dysfunctional water supply service if they experience prolonged individual outages or a high total number of shorter outages in the past year. And then there was a question about the primary industry analysis and the impact on the economy. I think it was under Chapter 1, which is the climate change. Yes, the Commission has done work on this. Our most recent submission for 25-26 financial year chapter looked at improving agricultural performance with the aim of identifying reforms to help facilitate transformation and improve the performance of smallholder farmers in South Africa. One of the recommendations by the Commission was that in order to strengthen the performance of smallholder farmers and promote greater transformation of the agricultural sector, the government should enter a public-private partnership to drive the implementation of precision farming more widely with the smallholder farmers. And also the question related to infrastructure municipal maintenance based on the chapter on infrastructure municipal maintenance. Based on the provided research paper on the triple Ps in South Africa, the municipal response to infrastructure maintenance is heavily influenced by the adoption and structure of triple P agreements driven by overall deficiency in infrastructure investments and fiscal constraints faced by the public sector. So the paper highlights that a core aspect of triple P contracts is assigning maintenance responsibility to the private sector. In an ideal scenario, the municipality's response to maintenance shifts from direct execution and funding to contract management and performance monitoring, ensuring the private partner maintains the asset to specified standards throughout the contract duration. However, the framework governing the municipalities and its municipal public-private partnership regulations is criticized for contributing to a fragmented regulatory environment and a lack of clarity that details triple P implementation. This ambiguity can lead to the public sector inadvertently retaining a greater share of financial risk than intended, undermining the core triple P principle of risk transfer and hindering efficient infrastructure delivery. I will pause here, Honorable Chairperson, and I will hand over to Chen. Thank you.
Thank you, Honorable Chair and members, for the very interesting questions. I think on the infrastructure front, I just want to follow on from my chairperson's points, and I think the key words my chairperson has said correctly is about that lack of ownership. Because when a government funds a infrastructure project, generally, whether it be from direct or indirect fashions, it does have more of a handle on the building of new infrastructures. And in the case of indirect grants, for instance, those infrastructure, because it's built subnationally. It's got to be built at some geographical location at the regional or local level. And so the ownership then gets transferred, should be transferred to at the provincial or at the local level. For example, infrastructure on the roads, on the the hospitals or the schools. That's how it's being implemented. That what we have seen, and I think what's Honorable Chair, you pointed out correctly, is that in asking the question, why is maintenance not done? It's because that the subnational level and the implementers at the local level are not taking ownership, and they're not therefore maintaining the infrastructure, which they should. And this is where I want to lash on to what CISA has said and implemented and implied. Is that why do we say that maintenance should be funded and implemented at the local, regional or local level? It's because the utilization and the even any of the, say, economic returns of using the infrastructure, it's at the local level, it's at the provincial level. Not so much as far as reaching at the national level and at the aggregate level. In other words, maintenance as a, shall we say, a function or a service delivery, it should also be happening at the subnational level, closer and closest actually to where the users are utilizing and gaining returns and benefits of that infrastructure. That makes sense. Now, the other points I'd like to just highlight, however, and this I'll bring in a clear and current example of a pitfall with this maintenance, which I like to call the maintenance cost trap, and even the maintenance or lack of ownership maintenance trap. It happens like this. Maintenance, in terms of its function and delivery, it should not, because it's at the subnational level, at the local level, with its benefits being occurring at the local level, it should not actually be on the topic of maintenance. It should actually not be maintained, or shall we funded to maintain from the national level. We say that actually with reasons actually. One thing is that, first of all, it's too far, all right, in terms of the spheres and levels of government to reach to where that infrastructure actually resides and deliver service or serve its function as infrastructure. Second is that once if another sphere that is far-reaching, that is at the, say, national level, started funding this maintenance trap, it generally falls into the project delays, overruns, cost overruns, and all sorts of other procurements and other implementation or operational issues, which all happened at the local level. Take the Gauteng Freeway Improvement Project, the GFIP. This is a project that started in 2007, and then in between there was the whole issue about e-toll, and where National Department of Transport was dragged in. The whole thing went into a complete disarray, having to be bailed out by national governments to Senrail. And now this project is, after, I don't know how many years, after 2007, it's still sitting at a GFIP level 1, phase 1 of the implementation. And not just that, so the provincial government of Gauteng has recently signed on a loan with the DBSA, Development Bank of Southern Africa, for 7 billion, and to be funded by the equitable share. You see how this now becomes a division of revenue issue, this maintenance cost trap. And all because of this lack of ownership and lack of, and when one attempts to sort of cross spheres trying to fund something without really understanding and appreciating the underlying flow and transactions of benefits and cost in real economic terms, and in the fiscal intergovernmental fiscal relations. And so I want to therefore highlight. Oh, and by the way, there may be, because I just saw that SANRAL had posted another deficit up into the billions. So maybe another, despite the loans, and which will be paid to SANRAL to maintain this GFIP, phase one after decades. And now, and despite all of that, it's still going into deficit. So maybe it will be another bailout coming up soon. And we move on to the other topics of agriculture sector to others, interdependencies to other sectors, from Honorable Bateman. Agriculture is particularly interesting and permeating the matter of interdependencies between industries to other sectors is because of this. And of course, we can actually map out, and that's what we did for this research and annual submission with the input-output table, in that seeing how the one sector going or inputting and outputting more and or less impact and its impact onto other industries. And for agriculture, I also like to rather bring it to the real world, is that imagine a farm, no matter how efficiently or how great that product is, how sweet the tomatoes are, and so forth, is produced there. It is all meaningless if it cannot get to the market. To get all of that produce to the market, we need logistics, we need roads, we need fuels to run those roads, and various other and other safety concerns, and also productions and manufacturing, because we got to package. We got to pack those produce. And so you can see, once this one industry can, especially of agriculture, and we say we focus on agriculture, but in fact, we got to focus on the entire secondary and tertiary industries. If we are, for example, for our tertiary, one may wonder, why is finance involved? Well, they got to trade with forwards and backward contracts on the prices of these agricultural goods, insurances on the goods of agriculture. And so we got to not just say focus on agriculture, but also other industries in order to make this industry grow. That is at the ultimate end, our economy. So our policy recommendation sometimes in this regard, it should not be about just sector specific or industry specific, or even say at the certain level of subsidies we need to support them, but rather we got to think broader and more comprehensively about how to grow this industry. And so in that instance, I'd like to propose, as it was in our various years of submission, is that one should not, because understand that these industries, they all operate in the markets, various markets, right? Tomato markets, potato markets, citrus fruit markets, and so forth. It's not easy for government, public sector, to intervene in those regards. And into those, because those are all participated and engaged by private citizens as well as businesses, from the producer side to the consumer side. Unless the government wants to start selling its own fruits, I guess we need to stay away from that. However, government can do is build the roads, make sure that the roads are safe, that the roads are not bumpy, and that the roads are not the grading at different levels of grading, because sometimes when the roads are, say the trucks are heavy, right? Those roads, they need to be specially made in terms of, and make provisions for through engineering and civil engineering, to say that this road, it's easier to and faster to go and safer, more steady to travel across this way as opposed to that way over the mountains and you know under the seas and so forth. I'm obviously exaggerating, but further on the issue, I will get to the Honorable Chairman, the Chairperson, your points about, by the way, Dr. Chair, congrats on that, in that how to convert. It's incredibly important in terms of our recommendations, as was pointed out. The thing is about this conversion, as I also spoke about, in that, yes, we convert things, but sometimes we need to watch carefully about how those conversions are imposed upon or driven or derived from the types of funding that it gets. But also, I submit that it should sit in alignment with the method of maintenance of infrastructure. And you're totally right. I want to really, really commend you for some of these maintenance job or the conversion job can be done so easily. Change the halogen lights into LEDs so that it doesn't heat up so much, and then so that the lights can stay on for longer periods. And the sustainability and reliability and the resilience of it to produce to get what we want, which is have lights on the road, but also that, for instance, converts those power lines to underground, so that it's staying away from as much as possible the environmental elements, the wind, the rain, the heat, and so forth. These are all little things that one may, right, in the process of maintenance, in the process of refreshing maybe some parts, maybe not to the point of tearing everything down, but also just to, since it needs to be maintained, since it needs to be replaced in some aspect of it, think more environmental or climate change resilience infrastructure infrastructure development and solutions, engineering of it to make it happen without having to say that, oh, we must have a special project with special funding and maybe you have a DG have it and DDG to make this happen. It doesn't have to be so bureaucratic. And in so doing, also the buildings themselves, of course, I think need no further emphasis that at the city level, this very important part of city planning, where and how tall, and so also how many people can reside on certain pieces of land and at what direction, and because of the climate change considerations thereof. I want to, at one point about the basic services, which brings me to it, is that apart from the measures that Nosisa has spoken about, in our research, though, when we say samples are limited, we mean that we only looked at the sample of water services, but we did not limit on the sample of municipalities. And our focus has been on the service delivery of water access in the sense that it's within the yard of the household units, that household unit is able to at least gain access to water. And then, yes, there is the other parts, which is about the reliability of that service. But bringing into a focus, I'd like to just use this opportunity then to speak on that coalition story and chapter, is that our focus is ultimately, and our findings ultimately, is that coalition, non-coalition government is ultimately not the essential determinant of success or collapse of municipalities. What is, though, is service delivery. And that we've seen that comparing before and after the conditions, whether it's first majority and then to coalition or coalition to then to majority, is that when the service delivery is not good, of course, the municipal, shall we say, the government structure of municipal management systems, people will vote to change, no matter what. They will take a chance if they haven't been receiving basic services, and it's understandable. And this has got also political implications, obviously for the upcoming local government elections. But I want to emphasize, it's not about coalition government or not. It's about service delivery. Today, the story can be changed in other ways, saying that everybody is getting good service. Then really, it's the changes will not happen from our own, and I think it will show up in our data because we did compare the both directions of that political construct of coalition and majority. I think your points, my final points, apologies for taking the time. Carbon tax, Honorable Chair, thank you for pointing that out, because carbon tax, in our analysis, South Africa, in terms of our carbon emissions, it cannot even hold account to any of these advanced countries, any of the European advanced countries in terms of carbon emissions. And yet we are slapped with this same level, if not higher, same carbon emission taxes and tax clauses and conditions from international relations and organizations. I think that is not fair, and that's what we'll see in our recommendations, that we call for a properly fair and equitable, and this has to be implemented through DIRCO. It has to be implemented through coordinated efforts, as you say, Honorable Chair, to make this justified. Because I think it is entirely unfair, as you correctly point out, that Germany who have gone from, or tried to, and then skip away from the Russian gas. And then they suddenly realize, no, they can't, but they will force everybody else to, go on this green energy drive. Meanwhile, themselves have gone back to getting gas from Russia. I think that is just hypocritical, actually, to be honest. And that is also unfair towards the likes of us. It's a developing country and sitting with quite significant legacies of inequality. Thank you, Chair.
Thank you. Okay. Just maybe one more comment, Chair, before you come in. I think there was a question that I think it was maybe more of a reflection on policy funding and measurement of outcomes. I think you spoke about that. In research and also within the policy cycle, I think we would know, Chair, that evidence, researchers have always tried to find a way how they can influence the policy cycle. And the question that has always been asked is to why, when there is overwhelming evidence, does this evidence not have an influence on policy? And one of the key issues that have always come to the fore is that perhaps the evidence that is being presented is not palatable in a political space, because the evidence probably will not be in line with the policy direction or even the political intentions. So the important thing is to appreciate, though, that for us to be able to measure the outcomes of policy, we have to have evidence. And that evidence must have an influence on the policy cycle. And for us then to be able to do that is to have that political will to say that, yes, the evidence is there, and the evidence, it's not something that can be disputed because it's based on facts. Therefore, the evidence then must be accepted and be used to ensure that the policies that we are implementing are strong and have rigor and are cogent. But what we found, or we have found in the policy cycle, is that evidence sometimes is not, even though it's there, the facts are there, but because it's not politically palatable or it's not politically expedient to use the evidence, then the evidence is sidelined. And then what we do need then is political will, because at the end of the day, it's about the people. It's about improving the lives of the people. And for us to be able to do that and to measure those outcomes, we need evidence. And that is what the FFC is bringing. It's bringing independent evidence, well-researched evidence, non-partisan evidence to the policy cycle, to policy funding. And now for government then, Honorable Bateman, to ignore that evidence, it is an indictment then to say that why do you establish these institutions that are supposed to give you evidence, and then you do not consider that evidence in the policy cycle? I think it's something that we need to reflect on. As this is a workshop, I thought I'll just throw that in, Chair, just for us to reflect on that. I don't know, over to you, Chair. Thanks.
Thanks, Doc. Let me ask Honorable Bateman. I recognize your hand, and then I didn't see any other members who had follow-up questions, so I'm going to make this the final round, and then we'll be able to head to a close. So, Honorable Bateman.
Thanks very much, Honourable Chair, and thank you to the FFC for your responses. I want to just ask a follow-up question around the data on water interruptions. I looked up the Stats SA survey, the household survey, and I saw the definition there, but the numbers that I see there look different to the numbers that have been presented in the presentation. And so I don't know if they've been sliced and diced in a different way, but can I ask that the FFC just goes back and just does a quick audit of that slide, and then if there are any changes that are necessary, provide us with an update, or just the references more precisely as to where the water interruption data originates. Thank you.
Thank you. Obviously, this is a policy question. You put on the chart the number of population changes within each respective provinces. What I'm trying to figure out is that, of course, that has got direct implications on the provincial equitable share formula. Has that, and this is the question I want to understand, one, have you made the submission on the basis of that review of the equitable share formula, A, and B, just the last point is about, I've been trying to, and I will, looking at the presentation and working through the document, the conversation about immigration. Now, it's a tricky one because there seems to be very strong political will, but there doesn't seem to be strong evidence as to how to deal with the issue. And it's a global issue. So a case study is Johannesburg, obviously. You go to the inner city of Johannesburg, you will discover, and many former little towns, whether it's Roodepoort or whatever else is there, you find these towns are now locations for citizens who come from different parts of the world to live in. The dilemma is that there's no law enforcement, there isn't a rights-based culture within that space. So in essence, you've got tenants who occupy spaces who were initially built in a two-room, now it's been subdivided into a place where, as the example of the building that burnt down in Johannesburg a year or two ago, taught us the fact that that building, if it had capacity for a quarter of the people who eventually were in the building at the time of the fire, which means it had increased fourfold beyond that, and it wasn't capacitated for that, it had no infrastructure for that. all of those things. So there's a conversation about urban sprawl and there's a conversation about town planning. But I want to understand the FFC submission on this issue because, especially on the immigration question, you can get the political school of thought of the Abahambe, get another school of thought of the let's build a wall and ask Zimbabwe to pay for it. Whatever your school of thought is on the issue is not what I'm trying to get us into a debate about. I'm really trying to get us into a debate about urban city management and its implication on that. Because once the rights and laws are not enforceable within a city, the demand for services, etc., increases. And therefore, you talk about water shortages, etc. You've then got effectively poor capacity to mitigate against that. So I want to understand that as per your population table you've put before us, how much does it account for immigrants? And furthermore, how much of it accounts to urban, if you like, occupation in many of the metros in the country? Because I think that will have implications as to when we talk about infrastructure and infrastructure build, many of the inner cities are suffering from decaying infrastructure or whatever. And I'm not here to other the immigrant. That's not my debate. My debate is that here is the reality as it sits. You can go to many buildings in Johannesburg, and you get there, you discover quite quickly this building is occupied 4 times what it was designed to do, which means it's got 4 times refuse collection issues. It's got 4 times the demand for water, 4 times the demand of electricity, 4 times the amount of demand for sanitation. That is a fiscal problem, or at least whatever. So how is the FFC going to make input on that? Because if you leave it to the politicians, you end up with the very sort of divisive othering or the sort of, argument that says Abahambe and all of that. And we've been having that debate with the Border Management Authority at Home Affairs. That's not my question. My question is really, let's talk about the urbanization and that sort of demand on municipal services. Dr. Chairperson, if you respond, and then the team can follow on.
Yes, I wanted to just say that when we look at the equitable share, we look at the population of the country itself, and then we allocate the equitable share, which the key driver thereof, though, is the population. So I think the question is, to what extent is that population variable, inclusive of foreign nationals? And is that included in the division of revenue bill? Chen, can you come in here, please?
Yes, thank you, Chair. I really want to say I appreciate how Honorable Dr. Chair put it. Indeed, this is a topic that I've, throughout my career, have seen how it has been misinterpreted through many ways, not just at the city level, but definitely at the provincial level. Let me answer it with one way, a simple way, and then we can sort of extend it to other areas of it. One is that the population estimate, it does include the foreign nationals because it is counted based on the individuals, irrespective of nationality or country of birth, that are in that we call it the sampling frame. Basically, that piece of land, how many people are in there, and who are actually in there. And so in doing so, and it's not just surveyed in terms of census, although census is the main driver or the foundation that this whole data is built upon, is that they also then built in this migration patterns inter-provincial migration patterns, and also definitely also, of course, coming from foreign or external countries, or and or from ourselves overseas, and they update that on the going basis as the Stats SA surveys its household data based on the frame that is the censuses, but it keeps on sort of because of attrition of sampling, that it will add in, and then it will take a few people off because they can't find the people that was originally in the census and so forth. So it's an updating going process, and that it is quite statistically robust. Let me put it that way, because there are all these other tools that it can check and verify to what are the confidence intervals for those estimates. So with that, I hope that it wasn't too complicated for the easy part of it. So ultimately, what this means is that the mid-year population estimates have taken into account the migration patterns. Then immediately, Honorable Chair and members, I think, were being well versed in these equitable share formula calculations on all these other topics and debates at maybe at the political level about migration issues and this burden and that pressure or so forth on our infrastructure and so forth, kind of becomes null and void, because if all the migrations and these population movements or between rural, urban, rural, foreign, domestic, foreign, are all taken into account, then, and if you put all this data into the formula, of course, they will have taken into account all of these migration patterns and the demands thereof that it's creating. Not just that, I want to extend just one step further, because I know that as you mentioned about political dynamics of it, is that school enrollment data, and school-going age population, which feeds directly into the equitable share formula under the education component. They all have this migration pattern elements and components embedded in the statistics of it, unless it is misrepresented or overstated by some provinces because they don't have good systems of tracking the students and so forth. Yes, then it would be susceptible to abuse. But other than that, in fact, all of those debates about how Eastern Cape coming to Western Cape or Limpopo going to Gauteng and so forth becomes null and void because of this statistical fact that migration patterns and interprovincial migrations and also domestic foreign elements and variabilities and variances are embedded already in our calculations. Now, there are two, however, two big policy questions, however, emanating from this. One is that the next level question is that, is our division revenue or allocations tools, transfers of equitable share formula in particular, being implemented true to the number and without any other adjustments that we don't know what they are for, or outside of the formula? And I would say that's in our submission for the last budgets and also in the MTPPS, is that we noticed that no, we actually haven't been. And we haven't been implementing equitable share formula with the population data as is. There are other mechanisms that is turning and twisting the allocation that was being calculated. And Honorable Chair members, you'll remember that last time I emphasized the point about there is another table, allocations outside of the equitable share formula in the Annexure W1 of National Treasury that changes all of this so-called, very directly and fed into the equitable share formula allocations from the data. That's number one. Second is that not to enter into all this policy debates, but on the question of the fiscal burden created by this sort of influx or shall we say external demands that have entered into our nation, and in terms of our social supports and social safety nets. The thing to watch out for, unfortunately, it has to come to this end that we need to look into the policies. For example, do we all understand and appreciate that in the SRD, in fact, it covers for refugees and also asylum seekers? Do we know that? And what are we going to do about that? Now, that's a political question or that's a policy question. But I'm trying to emphasize from a fiscal point of view, these policy matters and determinations and factors in the policies, they do have a fiscal policy implications, because based on that, I'm sure you understand, that then it creates the demand, right, that is covered under the policy. That's, I don't know, maybe we do, maybe we don't. But ultimately, we need to know that it is currently covered under the SRD, and the conditions thereof, and therefore the implementation thereof has got other implications, of course, on the transfers to that program. Although I should rather give credit where it's due, is that National Treasury, together with SARS and SARB and others, and through the Vulinela, they do try to do, as you heard earlier, even in the engagement, they did try to look into the beneficiaries and the conditions and the backgrounds of those beneficiaries to have received social safety supports and nets and benefits. And that, I think, it's wild to do, because whether we go one way or another, that's the kind of data that we do need in all, as my chairperson said, in all our policy decisions and directions and implementations. Thank you, Chair.
Thank you so much. I would like to hand over to you, Chairperson.
Thank you so much, Doc, and thank you to Shen for the presentations and the input. The two respective documents that will now serve as part of the committee. You have asked us to schedule an inter-committee or inter-chairpersons session to engage with the data and the presentation. I note that. I just know the program is heavily congested in the next while, and therefore to be able to accommodate and coordinate between all the respective committees takes an incredible amount of skill. But if we were to try and schedule it within a virtual platform, that might be a possibility to be able to go through. I've taken note of the recommendations as you've put them at the end of every respective chapter. I think to Honorable Bateman and many others' inputs regarding agriculture, it may be an important one to engage, simply because there is a nexus between what you have raised today as far as what climate change does to agricultural prospects. But there is also a further nexus that says that when you look at the Jobs Fund presentation that we would have been furnished with the last time, the majority of the jobs being created happen to be in the agricultural space. The National Development Plan makes a strong argument for that, and ultimately with the new AGOA renewal or lack thereof and tariffs, agriculture and exports in that regard are a crucial nexus. So I think it'd be an important conversation to have. Speaks to economic growth and job creation in our country. So, and then obviously I will follow up. I think, Doc, you might be at the Budget Council meetings, and certainly this will be the conversation. One of the issues that deals with what SALGA is at as far as local government is concerned. Really, I thank you, and thank you to honorable members. I want to appreciate this presentation, and then as per the actions of what I've laid out, we will then take it forward from there. Thank you to the FFC. I appreciate it, Sabula.
Thank you so much, Chairperson. Thank you so much.
Thank you, Chairperson. Let me, while I've got everybody here, just to finish some of the, just by way of announcements. Firstly, I want to thank Dr. Nkabane, who's joined us today as an alternate from the ANC. Thank you very much for that, Dr. Nkabane. Let me ask, just by way of announcement, Honorable Kamede sent the apology today, which I think we needed to acknowledge earlier on due to a bereavement. And then also Honorable Kwangwa, in the same way as had communicated yesterday about the apology, we want to acknowledge the apology for today. The last announcement I need to make, honorable members, is that naturally the arrangements are being made for our oversight trip that presumes next week, Monday. And so you will be furnished with respective details on that. Ms. Nomfusi is working extraordinarily hard to make sure that all the logistical arrangements are being put on the table. And so that would then be at our next engagement as a committee, is the session starting on Monday afternoon, evening, to proceed with the oversight for the rest of the week in the Eastern Cape. Let me, in doubt, Mashila, I don't think there's anything else I need to cover. I think we have managed to spare an hour from the meeting. I don't know if there's anything else.
Yes, we are fine, Chair. Thank you.
Honorable members, let me thank you for your time and say that we will then close this meeting at this point. See you all on Monday. Thank you very much. Good afternoon.
Thank you, Chair.